Association of Financial Advisors of India presents live webinar. The Gold Loan Reset. Navigating RBI's draft framework for banks and NBFCs. Moderator Mr. Ashish Agrawal, Director, Resurgent India Limited. Eminent speakers: Mr. Vinod Kothari, Director, Vinod Kothari and Company. Mr. Unnikrishnan, I'm Managing Director, Yoga Shemmam Loans Limited. Ms. Pooja Abhishek Singh, CEO, Manipal Fintech Private Limited. Mr. Parag Srivastav, Head of Financial Institutions and Government Banking Group, Ujjivan Small Finance Bank.
Good evening, friends. I'm Ashish Agrawal. I'm from Resurgent India Limited. I'm the founding member of AFAI also. So today's evening, I would like to welcome all of you in this important topic on the reset of gold loan RBI draft framework discussion. I would like to welcome to the esteemed panel. We have Mr. Parag Srivastav ji, Pooja ji, then we have Mr. Unnikrishnan ji and Vinod Kothari ji. So all the panel speakers are having very vast experience in the gold loan business, either as a lender or to the ultimate borrower or lender to the lender actually. So, and the Vinod Kothari ji has very vast experience on the advising the companies which are into NBFC space, either in gold loan or other sectors from the regulatory point of view. So it's a very good panel from today's point of view. RBI has come out with the draft guidelines where they are resetting the entire gold loan industry. And as AFAI, we are discussing today so that we can understand what are the suggestions which we want to submit to the regulator, because the regulator has asked us the recommendations and the suggestions from the industry. So this is a small step which we have tried to bring the industry as a whole at one place. It's a complete ecosystem which is available here. So we have people who have participated, who are participating in this webinar from the industry itself. So bankers or the professionals and the NBFCs and some of the technocrats are also there. So we will discuss and we'll do the manthan that how this circular or this draft guideline will impact the entire industry, either in the positive way or maybe to some extent in the negative way also. So we have experts, they will discuss on that. But before that, I would like to just give you some brief outline about the gold loan industry in the country. So if you see, gold loan is a very old practice. It's not a new product in the entire ecosystem. And if you see, still 65% of the gold loan industry is into informal sector actually. It's unorganized. It's still unorganized actually. And Indian households has something around 25,000 tons of gold. So this is a huge opportunity for the gold loan companies, but still the size is not very big in the overall lending industry, the retail side. And if you see in the gold loan, most of the large players are now trying to get into it. Actually, if you see very recently, the companies like L&T Finance or Poonawalla, they have announced, Poonawalla FinCorp, they have announced their plans to enter into the gold loan. And the very large sponsor, the company called the Bain Capital, they have announced to acquire Manappuram. So it shows that there is a lot of interest from the large players in this industry. And if you see, there may be some regions that is a most liquid and most secured asset in the overall lending business. This may be one of the regions, and the name is also very good in the overall lending in the gold loan actually. And technology has, I think, changed a lot. I think better controls. So earlier we were listening many fraud gold and other things, but now we are listening very less actually. So this is another, I think, region for the larger players to come into this ecosystem, because through technology they can control better actually. And if you see in the RBI circular, the latest circular, which is draft guideline, and they have tried to cover many things in the more transparent manner, so that at the end of the ultimate borrower place, there should not be any challenge to them. And he should understand, or she should understand better about the product, so that there should not be any ambiguity. So there are many areas which have been covered in this draft guideline. We will discuss one by one, and we'll try to decode these guidelines also, so that everybody should be aware that what is the thought behind that, and what will be the impact on the entire industry because of this draft guidelines, and which are the areas where we need to give suggestions. So we will discuss on that. I'll take questions also from the participants, and I'll request to all of you, please keep your questions ready. We have very senior professionals from the industry. They will be in a position to reply your question from their point of view. So I have prepared a small PPT which will help you to just understand which are the issues which have been raised by RBI in the draft circular. So I'll request my team to please showcase PPT here. So these are the RBI directions 2025. These are proposed actually. They are not confirmed till now. The next slide. So as I have already covered that this last 1 year, there is a big jump in the overall gold loan portfolio. So it has doubled actually. If you see in the lending market in India, there is a growth of something around 11 to 15%, but in the gold loan, it is almost doubled actually. So this is a very great sign that people are now interested to take gold loans. And you see that earlier this was a taboo, that people are taking gold loan only for in the case when they are not having any means for raising resources for their consumption of other purposes. But I think this is changing now. People are taking gold loan for the income generating requirements also, so for businesses also. So that's why RBI has come out with that new something in the circular also on the income generating loan point of view actually. Yeah, next slide. So this draft directions was issued by RBI on April 9 to 2025, and then we have the timeline to comment on that by 12th of May 2025. So within 5-6 days, we have to submit these recommendations. Next. So key highlights of the draft directions. If you see, there are stricter LTV norms, then the 12 months cap on the bullet repayment, then the dual signed assaying certificates made mandatory, and end-use verification and the repledge of the gold. So these are the some areas which are covered, but I'll cover in detail in the next slide. Next slide, please. So if we decode the draft guidelines, so the first thing which has come in the circular, it is the scope of rules. So now this made a unified set of rules for both NBFCs and banks. So we can say it's better. It is better that now banks and NBFC are at par in almost all the areas of the gold loan from the RBI point of view. There are some areas which are still not at par, which we'll discuss from our experts' point of view. Loan categorization, I think earlier there were gold loan in the category of agriculture and non-agriculture, and for banks, but for NBFC there was no classification. But now they have come out with that consumption loan or income generating loans. So it is very well defined now that all RE should have the portfolio in these two categories. And as per our understanding, will not impact much on the overall portfolio. Next. Then the third thing is income generating loans. So this is now well covered. Earlier it was not there. It was this classification was not there, and this is now very well covered. How this can be processed, how it can classify as income generating loans. So the gold can be a collateral security. It should not be a primary security in the income generating loan. But there is a catch, I think, that I was discussing with the experts. I think they will also guide us that for NBFC, there is a limitation of the LTV, but for the banks, there is no limitation for LTV. So, which is a very gray area which need to be discussed. LTV limits. So, earlier it was defined as 75% of the loan. That was only for non-agricultural loan. I think this is now uniform for the all loans to NBFCs. But for banks, I think in case of income generating loans, there is a leeway that they can give more LTV if they are defining the loan as an income generating loan in their books actually. So this is one area where it is, I think, applicable separately for both NBFCs and banks. Next. LTV calculation. So earlier, I think that LTV was calculated on the disbursement amount and for NBFC, but for bank, it was including interest. So NBFC was having that advantage that they can have the absolute loan of 75% of the gold amount, gold value, while the banks were not doing this. The bank were including interest. So now this is very well defined that in case of bullet repayment loan, this will include the interest portion also. And if there is a breach of LTV, there will be a penalty of something 1% also. Provisioning of the this loan actually will be 1% as a standard asset. So this is some kind of penalty which is there for banks and NBFC, and you see that this will impact, I think, the loan amount by NBFC to the borrowers. So the gold loan, I think earlier it was 75%, but it may be 65, 70% because of interest rate. So the NBFCs can plan either the monthly EMI loans or maybe periodical loans actually, which will have, I think, better LTV in their case actually to the borrower. Top-up loans, top-up loans earlier it was defined that how the top-up loan can be done, can be given. And it was very well defined that interest payment by on the accrued interest should be paid. The LTV remains within the limits, but now so earlier the accrued interest was not required to be paid if it is the NBFC or banks are topping up the loan. Now this is defined that top up or renewals are only allowed after accrued interest is fully repaid actually. So this might impact also to some extent to the overall loan, the overall size of the industry. Next. Loan tenure, I think they have now classified that tenure of consumption loan in the nature of bullet repayment loans shall be capped to 12 months actually. This is one area where we need to discuss. Earlier, there was no restriction as such. So I think there can be a restriction on the large size ticket consumption loans because the tenure is very less actually, 1 year, the only period actually. Lending against repledged gold. This is one of the important area where the NBFCs, which are not very large, they were having this advantage that they were repledging their gold to the banks directly. And they were taking the loans from the banks for lending to their borrowers actually, and where they were taking that advantage. Now, as per this guideline, it looks like that RBI is very much concerned that they are not allowing the repledging of the gold to the banks or other lender. If you have taken as a gold as a security, then you have to keep it with you. And whatever the money you need, you can hypothecate your books and then you can take the loan from the lenders actually. So these are some of the concern areas or the areas which have been covered by RBI in their in its circular or the draft circular. We have very good panel here. We have all the experts. So we would like to understand from them what are their views actually and how they think on these all areas. What will be the impact on the overall industry? So we have Mr. Unni Krishnan, who is a veteran in the industry. He was Group CEO of a very large gold loan company, and now he's running his own gold loan company, and he's practicing since last many years. So, Unni Krishnanji, first of all, I would like to welcome you here and thank you for joining with us also in this webinar. So, sir, we would like to understand as an NBFC in you are in the, I think, base layer. So, the base layer NBFC, do you think what will be the impact of these guidelines or the draft guidelines in the many areas which we have covered in this PPT? So, would be happy to understand from you. So, like LTV or income generating loans and the differentiation in some areas where the banks are having edge. So over to you. And I think during our afternoon session, you were saying that there are 3, 4 areas are there which are very positive. So if you can cover these areas, it will be helpful to all our audience also. So over to you, sir.
Thank you, Ashish ji. Am I audible?
Yes, you are audible, sir.
Okay. See, this circular in its draft form, okay, issued by Reserve Bank of India, will be definitely making some impact on NBFCs. While in the press and the general media, there have been a lot of talk about negative, that this will impact negatively. It's not so. There are certain positive aspects as well. I would like to touch upon one or two positives. The first and foremost is this particular circular permits renewal of gold loan without repayment of principal. That means if the loan remains a standard asset in your books and you are able to collect the interest, you are allowed to renew the loan any number of times. This is a great positive, because this is one particular point the industry has been proposing to the Reserve Bank. And finally, Reserve Bank has understood the product in its proper sense. Because we all used to say that gold loan is similar to loan against one's own fixed deposit in the bank, where nobody asks any question about repayment of principal. So this is similar to that. When a customer borrows against his gold, he's pledging his own jewelry, his own gold. So the question of repayment of principal normally doesn't arise. He'll figure out how to redeem his gold, how to take back his gold from the lender, be it an NBFC or a bank. This is the first and foremost. The second thing is, as per the existing regulation, NBFCs and banks are not supposed to lend against gold coins. So Reserve Bank has come out with a new definition: specified coins. Specified coins means, coins sold by banks. So as per this draft, we are allowed to lend up to 50 grams of specified gold coins. This is the second positive. The third positive is something which will ensure uniform standard in appraising the jewelry by ensuring 90% as the reserve price at the time of auction. I don't know how many of you are aware, there was some arbitrage or gray area while assessing the gold. Because even in case, we are on the side of caution, and we assess the gold liberally. Some NBFCs used to do that. Some NBFCs used to take advantage of this liberal interpretation. Because at the time of auction, as per the existing regulation, we were required to refund only 85% of the market value of 22 karat gold. That was the reserve price. That is the minimum price the customer was expected to get. That minimum price has been raised to 90%. So this will remove some arbitrage, which some NBFCs used to use for their advantage by quote unquote manipulating the underlying value of the gold. So this has been plucked. This is a great positive for the industry as such. So these are, at least the points which I've seen as the positives. Now coming to the negatives, or the points which we should propose to Reserve Bank to revisit. One is though circular is issued to harmonize the standards, and the circular has been made applicable to both banks and NBFCs, there is an arbitrage here, or there is let me say there is a discrimination against NBFCs, because NBFCs, there is an LTV cap of 75%. Whereas for banks, if they are lending for income generating purposes, there is no LTV cap. For NBFCs, there is an LTV cap of 75%. This is quite arbitrary. We are sure we should propose this to RBI to revisit this recommendation. There is one more thing which is not there in the circular. This is on CRAR, capital adequacy. As per existing capital adequacy norms, banks are not maintaining an equity on lending against jewelry, whereas NBFCs are required to maintain 12% capital adequacy. So already there is a disadvantage for NBFCs. Added to that, in the form of LTV also, NBFCs are going to be impacted. The other procedural things are like a 75%, as Ashish ji said, 75% should be calculated. If the loan is a bullet payment loan, 75% should be calculated by including the interest which accrues over the period of the loan tenure. Suppose the loan tenure is for 1 year and the lending happens at 10% and the amount of loan is 1 lakh. Then the amount for the purpose of calculation, for the purpose of LTV calculation, shall be 1,10,000. That will definitely reduce the available loan amount to the customer. So this is something which goes against the customer's interest, because these customers are generally customers who pledge only 16 grams of gold. This is an average gold loan customer, is a customer who pledges 16 grams of gold. For a customer who is pledging 16 grams of gold, this is something which is going to impact the money which he can borrow. So this definitely impacts the customer. The other point is on credit appraisal, credit monitoring, continuous maintenance of LTV. For example, continuous maintenance of LTV is going to be very, very difficult, because the moment you lend, you have control on LTV. You have control, you know what the gold price is, but you don't know what the gold price is tomorrow. So if the lender is asked to maintain 75% on a continuous basis, even if he collects the interest, that's going to be a very tough task. And from day 2 onwards, there is going to be an LTV breach, provided the gold price holds where it was at the time of lending. So this is very tricky situation, but the solution is not that hard. What RBI says is that you can still consider those loans as standard assets. You provide 1% as standard asset provision. For smaller NBFCs, this is going to be a huge burden, because 1% on asset is a huge amount. Maybe RBI should consider different dispensation for smaller companies, or they should increase the cap from 75 to say 90 or 95 for the purpose of these LTV bridge purposes, not for lending purposes. So let the disbursement purposes, let 75% remain there. But for a LTV breach purposes, if you are able to raise the LTV cap to 90% or 95%, then things will be smoother. Then, of course, for income generating loans, end use monitoring is mandatory. Documentary evidence is mandatory. So, but in spite of that, I feel that this circular will give an undue advantage to banks over NBFCs, because they are not bound with the LTV cap if they are lending towards income generating loans. Yeah, Ashish, I think I have covered pretty much all the points which I had in my mind.
Thank you so much, sir. I think you are very well covered and set the tone of the program also as a veteran in the industry. You have positively told many things also, the three, 4 things which are good for the industry. And they are, on the other side, there are certain areas which are to be revisited by RBI. So LTV cap on income generating loan. I think there is a discrimination where banks can keep higher LTV, but NBFC are not allowed. Car breach also another, and the LTV breach in case of the 75%. So it can be a good suggestion also where there should be some leeway to the NBFCs also for that. So thank you so much for giving us these suggestions. It will be helpful from the recommendation point of view. Friends, now we have Ms. Pooja Abhishek Singh, he is CEO of Manipal Fintech Private Limited. So she is into the fintech space where they are into gold loan space also, but as a fintech player. So they are using a lot of technology and other areas. So Pooja ji, first of all, I would like to welcome you and thank you for your time for joining with us. So we would like to understand from fintech, but because Unni ji has given the area, covered the area from the NBFC point of view. As a fintech, what challenges or what are the positive areas which are there in the circular? And because what we see that in case of fintech, the people are looking loan within 5 minutes or 10 minutes actually. So this some areas are there which are like the presence of the borrower, something assuring the verification, the whatever gold loan and all, and this verification. Will it impact the overall growth of the fintech companies in the gold loan space, or whatever the areas which you want to cover? Over to you.
Thank you, Ashish. Thank you for inviting me for this forum. See, from this circular perspective, or the circular which came in earlier, which was in September, right? We had a fintech industry level where very few players are trying to see how we can modernize the gold loan industry, which is still in a very early stages of its growth. We have still only 5 to 7% of India's gold being pledged, and we have only 35% of the sector's potential available in the formal sector, right? So as a gold tech, we were really looking at how we can bring tech and convenience to the consumers, right? I mean, and doorstep kind of models were really some of those initiatives which could have brought in convenience, and also the taboo attached to gold loan, where the customer still finds it a taboo to take their gold for pledging to a bank. We could reach it to his home. We could give them the convenience and the comfort and the trust of bringing the gold loan to his doorstep. So those models have definitely taken a backseat. Have taken a little bit of a backseat in terms of the fact that now the customer has to be physically present in the branch at the time of assessment of the gold, or at the time of valuation. All of those things have to happen in the presence of the banker or in presence of the lender. Now those models do bring in inconvenience for the consumer and do make it a little bit of a challenge for us at a fintech level to bring in more digital and customer friendly, tech friendly products that we were trying to work upon. Having said that, the new circular that has come in is obviously a very customer-centric approach that RBI wants to take, bring in transparency, bring in a lot of information with the customer. We see some of these areas as a challenge, and some of these areas are an opportunity also for players like fintechs, right? Where today the RBI has said the gold valuation standardization has to come in. How does that standardization come in? Can we bring in some AI-led advanced models? Today, there are a lot of LLM models available where we can bring in those innovations in assessing the gold, or standards in assessing the gold. Those kinds of innovations we can bring in and work upon very fast. There could also be models where, digital auctions, that is a kind of opportunity that opens up, where the RBI expects that there should be, again, transparency. If there is a digital auction process, that should be followed, and the customer should get that awareness. So it brings in opportunities for fintechs to come up with some of the technology solutions which every lender would require and every consumer would require, and play an important role in bridging the gap between what is currently available and what can be done. It also, like I said, a little bit of, I would say, a request to RBI that they should consider customer convenience, and models like doorstep should be reevaluated, where if there is a transparency, we brought in video KYC in this country, right? If we brought in even insurance for that matter, today, no valuator goes to your house to do your car valuation. It is all done online. These kinds of models should be acceptable. How we can bring in standardization compliant processes, but also not forget the customer and the consumer convenience that can be done through digital intervention. So that would be a request to RBI from players like us, from fintechs, who would like to bring in that innovation to this industry.
Okay. So thank you so much. I think you have rightly told that doorstep lending might impact because of this actually. So RBI should rethink on that part actually because you see as of today everything is available at your home. You are not required to go anywhere. So why the gold loan cannot be there actually? So and even other loans also, if you see, there is no restriction on that actually. So I think this is a very important area which you have covered. And then AI-based valuation and digital auctions. So as a fintech, I think this will help. But again, I would like to understand from you this new circular, new guidelines, which will become formal also after some time. Do you think that it will impact the relationship of the fintech companies with the banks and NBFCs? And which are the areas where do you think this will impact the overall partnership also?
See, it will, I won't say impact immediately, because again, like I said, the opportunity is so huge that every lender still requires every possible intervention to get the consumer for gold loan. Given the fact that unsecured lending and the unsecured portfolios are under a little bit of a stress right now, secured lending through easy liquid gold loans is the need of the hour. And given that need, any player who's bringing in that value to the lender and to the consumer will be valued. So I don't see an immediate threat to the players like us or players who are trying to, be an aggregator, bring value to the customer, bringing all possible lenders on one platform and see how the customers can benefit. Now, those kinds of things, not many people are today providing, and hence that value will still remain. Yes, increasingly we will have to bring in value propositions to the lenders where, like I said, some of these innovative products for which they will take a longer time, and we having an advantage of being a technology company can bring in those models first, will start to make us more indispensable in the ecosystem. And that's how I see this progressing in way forward.
Okay, so but this key issue again, I'm coming to you. This doorstep verification is no, not doorstep, rather at the lender's place. So as a fintech, practically there was no physical touch earlier. How it is required? So how it can be managed actually, or it can be possible because the banks are having limited branches and limited accessibility also. So yeah,
Right. So we are still working out those models, Ashish ji, because it is again, currently the mandate is the customer has to be present in the branch, right? So, but we are saying how we can look at some of the soft approvals even before the customer lands so that his time taken in the branch is reduced. Can we do some kind of integrations and bring the customer only at the last stage where he's on an appointment basis, on some kind of a, routine, the routing that we can do, and some of our employees, can they, assist them beforehand? So can we do an assisted journey for the customer? And only at the last stage where the intervention or a mandatory intervention as per the RBI guidelines is required, we bring the customer to the branch. So yes, it requires some amount of physical touch also now. We have always been a phygital company, and we would still feel that this being a very sensitive product still, right? Gold is very close to every Indian. Will require some kind of a physical intervention. And yes, and that is how we are now also progressing, looking at how at least 70-80% of the journeys can be digital, and the balance 20-30% journeys, if required as of now, make them physical, and do some kind of a scheduler or a smart scheduler and appointment kind of a thing, so that the time taken for the customer at the branches goes down and their inconvenience also goes down. So that is how we are approaching it right now.
okay. Thank you so much. I think you are very well covered also. But in the current online era, RBI is asking that customers should visit the branch. The banks are reducing their branches actually, if you see, and the NBFCs are also now going on the fintech tech model actually. So it looks very surprising this move actually that RBI asked to there. Although there'll be some solution of it actually, let's see. But it's a very hard, I think, condition
Absolutely. So
which
this
might
was
impact.
a request would be to RBI to reconsider this.
Yes, definitely, it
First,
required actually.
customer first and digital first is what India is today. So we should.
Yes, yes, correct. Thank you so much. So now I'll come to Parag Srivastava. Parag ji, you are head of financial institution in Jeevan Bank, and Jeevan Bank is a leading bank in the overall small finance bank. So you are providing limits to the NBFCs. although you are giving loans to the ultimate borrowers also, but in your bank, you are responsible for the lending to the NBFC. So with this circular, what do you think that what will be the impact on the assessment of the NBFC from the limits point of view, and how you will do the underwriting of, because these certain things are there which are sometimes it looks like that it is very impractical to follow by the NBFC, like income generating loans. They want the verification of the end use and all, which is not a practice till now, actually, even not in the other sectors also, other than the gold also. So these are some of the areas I think should like to understand that how you will do the assessment of these NBFC, and will it impact the lending to NBFCs from the banks overall. So over to you.
Yeah, thanks Ashish ji for inviting here. And so first thing is I welcome this step from the regulator to kind of harmonize the regulation across all regulated entities. There were different practices being followed in the market by banks, NBFCs, and other entities. So there is an effort to kind of trying to standardize it, and the gold as an asset class and the NBFCs which are lending against the gold jewelry. The biggest advantage as a lender to the such NBFCs has been that the credit cost has been quite low because gold is being a very liquid asset. So at point of time, if borrower is not able to repay, I'm telling about the ultimate borrower to the NBFC, they always had an option to auction the gold and recover it. So the credit cost in this particular segment had been quite low. So that was always a very strong point. The before this draft guideline came, during the assessment of any gold loan in NBFC, there was always a very high focus, other than the financials and regular credit factors. There was a lot of focus on assessing the operational capability, because this business is quite operational intensive. How they are accepting the gold, verifying the ownership, what is the how the assaying the gold for the quality, is it the correct one? What's the storage capacity? What's the monitoring of the gold movement? Those were some very high credit factors which were being assessed by lenders to understand the processes which these NBFCs were following. Now, going forward, once this draft guideline kind of formalized in same manner or with some changes with the industry asks, there will be also a kind of assessment to be done on the basis of how NBFCs have adopted to the methods of credit assessment, because it had been a over-the-counter product where primarily because of the collateral, the lending was given to the end client. Here now, but they have to adopt to the method of kind of an income assessment, repayment capacity. They have to ascertain whether it's a consumption loan or an income generating loan. And also, if it is an income generating loan, there is a kind of a credit process involved. So, how NBFCs have adopted to that process, that will be quite important factor again once the regulations come. The other point which I see is a quite positive from the industry point of view, and also from as a lender to the gold loan NBFCs, that they have capped the upper tenor of 1 year for this bullet kind of a loan. So obviously there is a kind of a repayment capacity which is getting checked at least at the end of 1 year for the end borrower. So that is one positive thing. Second, the LTV, which was banks were following along with interest accrual, NBFC, some of them were giving only on the sanction amount. So again, that is kind of adding a risk. It is a better risk management factor. So I would say if some of these regulations come, this will add the more comfort on the industry, because I'm sure that whatever changes finally come, the NBFCs will adapt to it, and the NBFCs which are doing multiple businesses, they already have the know-how of how to assess the loan or how to verify the end use. For them, it will be easy to migrate. Only gold loan entities, they may have to kind of adapt to it. And but there are obviously, I'm sure with the regulations they will be able to do it. But overall, I would say this is adding to the kind of comfort to the industry. Better than that, other than the asset class comfort, these some of these factors will help. There are one or two points which other panelists pointed out, like income generating loan LTV is 75 for NBFC, whereas for banks it appears, though it's not clearly written, it appears it can be higher. I'm sure means the regulator, after taking suggestions from all the players, will make it rationalize.
Great. Thank you so much. So I think it's a good news. We have many NBFCs, those are here, those have joined in this program as participants. So their founders, they'll be happy to know that lenders are now positive or thinking in a positive way, that this transparency or uniformity might help them to lend more to this sector actually, but depend on the case-to-case basis. But this is a good news. But there is one, I think, major thing which I think you have missed out. Although Jeevan Bank may not be doing, but some of the banks in the country are lending to NBFC against the repledging of the gold, which they are taking from the borrower, and they are lending huge amount to the NBFC at the very lower cost also. So, what do you think as a lender to NBFCs? Will it impact to these NBFCs? Because I think this is clearly written in the direct draft guidelines that this will not be possible. So if you can highlight on that, although it will be your personal view because your bank is not doing this thing, I believe. So if you can comment on that, sir.
Yeah, so I would only say that I think some of the smaller NBFC and only some of the very few banks were offering this product. But if you see the other asset classes, the similar rules are already existing. Whether you take the funding, I just compare it with the stockbrokers used to pledge the client share and avail funding, which was not a very right practice, which SEBI, RBI, everyone kind of intervened and stopped it. So basically, the basic principle is the asset which don't belong to intermediary, they should not pledge it further to avail loan. To that extent, I think there might be some impact on the smaller NBFCs. Their costs might slightly go up, but they have to also see the positives of the circular and kind of try to build more businesses around that. But I think this was a practice which was already prevalent in other asset classes. It is now getting clearly extended to this segment also. So I welcome that.
Okay, thank you so much. So Manoj sir, I think you are already practicing it in terms of regulatory, and you are expert in regulatory matters. So we have listened the views of the other panelists, and they have covered many areas. But we would like to understand from you, see that what is the overall thought process behind that of RBI to bring this kind of circular and this kind of regulation. And what do you think? There will be a lot of ambiguity in the mind of the industry or people who are practicing it, and will it impact their compliances or the other part of the business also? So over to you. I think you can cover up all the areas. I think you are expert, so I'll not be in a position to ask anything from you. Yes, sir.
Ashish, thank you very much. And thanks to all the wonderful panelists for bringing up several very, very important questions. Particularly Mr. Unni Krishnan, being a practitioner, has been able to point out several practical issues. And then both Poojaji and Paragji brought up issues pertinent to their experience and very, very pertinent points, which I'm sure would have added tremendous value to all the participants. Ashishji, first starting from an overall perspective as to why this reframing of the entire guideline might have been needed. I think history is that RBI brought, to my recollection, the first guideline for banks lending against gold would probably be dating back to something like 1970s, 1974, if my guess is correct. Therefore, banks had been lending against gold for years and years. For NBFCs, the guidelines were issued much later. Once again, I guess around 2010 or so. And those guidelines for NBFCs were largely based on the guidelines issued in case of banks. I mean, intent of the RBI was never to have different set of rules for banks lending against gold versus NBFCs lending against gold. However, the way the language of the NBFC regulations for gold lending was crafted, it was much lighter, of course. It seemed to suggest that NBFCs may lend based on a loan to value ratio of 75% at the time of giving the loan. Whereas the actual maturity value of the loan might increase because obviously when it's a bullet repaying loan, the accumulated amount on maturity would be higher and therefore LTV. Price appreciation in gold will never be matching up the interest. I'm sure everyone understands. Interest rises much more. And therefore, if I'm lending 75% today, it would never be 75% on maturity. But NBFCs took advantage of that particular language, which though in our reading, it was always that the LTV shall be monitored, LTV shall be maintained. The word is maintain, maintain meaning you would keep all through. It's not merely 75% at inception, you need to maintain 75%. So in our reading, it wasn't allowed earlier as well, but that's what maybe the market was trying to read into the gap in language, and NBFCs were competing with banks on the strength that I can lend you more against the same jewelry. Please do understand, gold is a sort of, in a way, it's a desperate borrower. All other venues of borrowing have died, and I've got, let's say, some great emergency at home where I need money instantly. I have a couple of bangles in my hand, and probably a lady would go to a pawnbroker, give the bangles and more. That's like a last minute emergency borrowing. Therefore, what matters greatly is how much are you able to borrow. The amount of loan matters quite a lot as compared to the rate of interest. Even though rate of interest is higher, people would still end up borrowing more where the lender gives more money against the same jewelry. That's the very reason for gold borrowing to happen. So NBFCs were competing on the strength of this higher LTV. Now, I think every speaker who came talked about the LTV distinction between income generating loan versus consumption loan. Before we come to that, let's broadly discuss that. Well, the idea of the RBI is to uniformly or uniform guidelines for both banks and NBFCs. Therefore, the stress is on uniformity. There is a gap when it comes to income generating loans. The RBI has clearly talked about NBFCs to maintain 75%. For banks, it's silent. And when RBI is silent on something, people can hear the silence much more. Regulator may want to remain silent, but people listen to the silence, and people are obviously listening to the silence. Let's talk about that in the next couple of minutes. But the idea basically is to have completely uniform, very, very micro detailed guideline. Everything is fairly detailed. How would you value gold? कितने आदमी से वैल्यू कराओगे? कितना वजन दोगे? कितना लेंडिंग करोगे? कहाँ रखोगे? कैसे रखोगे? कैसे ऑप्शन करोगे? Almost in every micro aspect of business, conduct of business rules, RBI has gone and laid a rule book. It's the problem when the regulator starts writing detailed rules about just about everything. That's exactly where Poojaji would probably be hurt. The RBI wrote that the borrower should be exactly in the branch of the lender, and therefore digital lending or physical lending would probably get curbed. In the past, we were facing lots of questions from people. Can the lending happen at the shop of the goldsmith? Because that's where people walk in. People walk in not at a lender space. People in villages walk at the goldsmith, local goldsmith. So can the lender actually manage gold lending at the goldsmith shop rather than at his own branch? But RBI wants now the physical presence of the customer at the branch itself. So idea basically is to have a uniform set, but there are distinctions at some places. Let's maybe then come to the major point where income generating versus consumption loan, and the reason why there is a LTV distinction there. First question, is this distinction new or was it there earlier as well? In our reading, the distinction was there earlier as well. The earlier guidelines also said in case of banks, if it's a PSL loan, priority sector loan, mostly income generating loan will be PSL. And when you talk about income generating loan, mostly banks would structure or do a so-called income generating loan only when the bank wants to, or the bank is able to classify the loan as a PSL, agree loan, PSL loan. So PSL loan, this limit of 75% wasn't there earlier as well. Banks could use discretion to extend above 75 as well. Of course, the discretion has to be policy driven. It's not the lending officer's discretion, but the discretion has to be spelled out as a part of the policy. That is there even now. Even now, the draft directions say that any LTV restriction has to be forming part of the credit policy of the lender. So the distinction isn't new. Now, the major question will it be easy for a bank to just give the tag of an income generating loan to a bank, to a gold loan, and increase the LTV above 75? Please do understand, for a loan to be tagged or called or classified as IG loan, I mean income generating loan, there are several conditions. First of all, the lender has to do a credit decisioning based on the cash flows. The borrower must specify what's the end use. The bank has to see what is the cash flow needed by that end use. For example, borrower comes and says that I need loan for agri purposes. The lender has to assess what's the requirement of agri, what's the funding requirement, what's the funding gap. In villages, it's easy for a borrower to come and say, I've got a plot of land, I've got a coconut tree at the back of my house, I'm a farmer. Every resident, every household, I think all over South India will probably have at least one coconut tree and one papaya tree. So every borrower can say, I'm a farmer, I've got a coconut tree and papaya tree, therefore I'm doing farming, I need an agri loan. So that is a wrong way of classifying a loan as agri loan, which is exactly why the RBI last year in September, they came with a bunch of objections that people are classifying a loan as agri loan without monitoring end use. When I borrow money for so-called agri purpose, the utilization of the loan has to be for farming. So I have to say that if I'm needing 1 lakh worth of loan, how will that 1 lakh be used for my farming purposes? That would mean, do I have a plot of land which is needing that kind of money? What kind of expense am I doing? If I'm, let's say, I mean, for the crop or for buying seeds or whatever else, do I need that extent of funding? So first of all, the purpose of lending. Quantum has to be based on the cash flow needs of the end use. Second is the tenure of the loan. If somebody says most gold loans happen for 12 months. When you talk about farming loan, crops are of a much shorter duration. If I say I need a loan for agri purposes, 3 months later the crop would be ready. It would be sold in the market. So how can I borrow a 1-year loan if I'm calling it a farming loan? So there will be a lot of gap, and I'm sure if bankers start using agri loan classification as the way to increase the LTV beyond 75, they are only waiting for the RBI inspectors to come and start questioning. They'll very, very surely be questioned. So end use restriction, tenure fixation, as also cash flow needs will all have to be tagged with the purpose of the loan. Merely calling the loan as an income generating loan will not be sufficient. Next point, I think Mr. Unikrishnan as well as Poojaji all mentioned that after all, the very motivation of a gold loan is the promptness over the counter lending, because I can't wait. I can't wait for filling up the form and then the credit officer going back and saying, okay, I'll take 2 days to grant you the loan, because the need is emergent. It's a mostly medical emergency or maybe daughter's bad. It's a last minute, no options. All other options are exhausted. I have no other option. I just need money now and today. In that situation, for a banker to give an agri loan or income generating loan, remember the banker has to assess the cash flows, he has to do a credit evaluation, is to be satisfied that this much money is needed, what will be the repayment for the particular purpose, etc. Therefore, fast TAT loans, it would be very hard for a banker to give it a tag of an income generating loan. And please also understand, regulations clearly say that if the banker is given the tag of an IG loan to a loan, but the bank is not able to satisfy that it is an indeed IG loan, then the loan will be treated as a consumption loan. That would mean all related consequence of the loan being a consumption loan, that would mean that LTV limit will once again come back. So to my mind, even though it seems possible that the bank would be able to lend more than 75, to best of my understanding, it would be hard for a banker to justify lending more than 75, even though the loan is so-called income generating loan. So this advantage to my mind, while we all, talked about it, I don't think it would give a great edge to the bankers over NBFCs. That's one significant point which emerged from the distinction, from the discussion so far, Ashish ji. Second point which you mentioned about repledging of gold. And Mr. Parag Srivastava was absolutely forthright when he talked about it. He said this, was it the law earlier that I can repledge the borrower's gold? That couldn't have been the law at all, because pledge is what in contract law parlance we call pledge is a case of bailment. The gold is placed with me for custody. ये किसी और का धन है, इसलिए मेरा धन नहीं है, ये मेरा माल नहीं, किसी और का माल है. किसी और का मान लेके can I go and create a pledge on that? I can't. That's a cardinal rule of a law of contract. The stuff I'm holding is not my stuff. I'm simply a custodian. I have a lender's interest. It's not my money. It's not my asset. So the question of pledging a borrower's gold never, I mean, could never arise in no matter whichever business. For example, if we also need to understand something beyond that. So I'll just come to that. And Paragzi was forthright in saying that similar practices in case of brokers were found illegal by SEBI. SEBI's, I mean, there were subsequent circulars though, but that was the law always. So there was never a question of any NBFC using the customer's gold to replace that and borrow money from a bank. That's obviously wasn't possible, well, is not possible ever, and couldn't be possible even under the new direction. However, let's look at another scenario. I have a gold loan portfolio. Can I go to G1 Small Finance Bank and say I need money against the portfolio? I have a gold loan portfolio. Can I borrow against it? Of course I can. That's what most NBFCs do. So when I go to G1 and say I would want to borrow against my portfolio of gold loans, I do what? I create a hypothecation. Hypothecation on what? On the receivables. Receivables in turn are backed by gold. So I can hypothecate my right over the receivables, which is inclusive of the pledgee's right as well. I cannot replace the gold, but that does not stop me from borrowing against the portfolio, which is what was possible earlier and will remain possible even now. So to my mind, that's a position. It's certainly possible to borrow against a portfolio of gold loans. And Ashish ji, a topic which you find it very, very interesting because most people will even ask, is it possible to have a co-lending in case of gold lending? Can, for example, an NBFC be a lender, primary lender, and can Ujjivan join as a co-lender? To my mind, we don't see a bar on that as well because the originating entity in this case will be the NBFC. It is the branch of that NBFC where the borrower has to be. And Ashish, you did the last webinar on that, and it was very well discussed there that even the share, the extent of money that the co-lender puts in is also not restricted now. It might be even as low as 0.1%. It might be 1%, 0.1%. So there might be an originating entity which is joining as a co-lender. There might be a bank which is, joining as a background entity. And all customer interface may be still done by the originating NBFC with even a very small percentage. So in my perception, that's the way I see it. It is attempt to harmonize things, to streamline things, to lay down ground rules. Only pity quite often is when regulators start writing rules, they write at such a length that they don't leave any space, any elbow room for making, any kind of, they don't leave a space at all. That's the problem, that too many rules, curb the scope for any kind of innovation, including digital possibilities, which is what Poojaji talked about. But otherwise, in general, I wouldn't have much of complaints against the draft regulations, Ashish.
Thank you so much, sir. I was expecting the same from you, sir. I think you have very well covered all these areas and you explained very well. So I think some of the industry people have called us and they were very, I think, annoyed with that guideline that repledging of the gold is not allowed now. So how we will run the business and all. I think still this question is there, but the intention of RBI is, I think, very right. But the co-lending part, which you have covered in the last, I think, how it will be done, because they are asking that borrower should be available at the branch and the gold should be kept with the lender actually. So in co-lending, how they will divide the gold in 80-20 or what will happen actually? So
Either one of the lenders can hold it as a trustee for the other one.
yeah, so I think okay.
Like in case of home lending, for example, the mortgage is in the name of one of the lenders. But it has to be like that's the part of the arrangement, whether physical custody will be with the originating co-lender or the funding major co-lender. Well, the bank may stipulate that we will like to keep the gold, which is okay because the customer has to be at the branch of the originating entity at the time when the loan is given. And well, the lenders are two lenders. I think the modalities might have been worked out, but I think it would more practical for the physical custody to be with the originating entity because the customer obviously needs proximity to that place. Customer would obviously walk into that very place where he placed the gold at the time of redemption. At the time of release, he will want to be I mean, that's also the rules also laid down. The release will also be from the same place where the gold was initially placed.
But this is the only asset class, Manoj, where the physical asset is coming to the lender actually. The entire loan business, there is no asset class where the physical asset is coming to the lender actually. So
Yeah.
co-lending guidelines are not clear about that actually. And here it shows that the custody of the security should be with the lender who is lending that money actually. So this
So
is a,
Ashish,
yeah,
it's
sorry.
it's an open point, no, but
Yeah.
I see this possibility. I'm not, I mean, giving a conclusive view as of now, but I see this possibility that after all, in any co-lending, there are two co-lenders, and it can never be that the two co-lenders divide a security among themselves, as long as the lender, one of the two co-lenders is a lender itself, and that lender meets each of the conditions of the guidelines. And after all, what is needed is customer interface should be with the same lender, which is the originating co-lender. I mean, once again saying
I
while
think Parag ji is
still
there, sir. Parag ji can also highlight on that. Because in co-lending side, I think this is a very important issue also. So, Parag ji, if you can cover on that.
Just on co-lending side right now, means as a small finance bank right now, we
You are
cannot
not allowed.
participate. But I'm saying co-lending model can be worked out for the entities who are permitted. Obviously, security will be primarily hypothecated with one of the lender, but there will be underlying documentation quite clear that there can be a pari passu kind of a thing, depending on the ratio, 20/80 or whatever is that. So that can be built in. I think that's not a challenge for the entities where it is permitted. The second important point is obviously the repledge was never allowed. It was a kind of a gray area, and some banks or some entities might be giving that. To that extent, as most of the NBFC lending is against receivables hypothecation, so that anyway is a permissible security, which even the smaller entities can always offer. Obviously, the rates may be slightly different because the banks who might be directly taking repledge may be offering slightly lower rate because it was a kind of a concrete security, though the legal ownership was always doubtful here. And if there is any legal interpretation, that would have definitely created issue. But still, within the credit parameters of any bank or any other lending institution to NBFCs, this model is always available to any NBFC. But obviously, all within the overall credit framework.
Okay. Okay. Got it. I think that's a good, suggestion which you have given. So, Unni Kishan ji, you have also covered three, four good things, gold coin and all these areas actually. So, as a practitioner or as an NBA, as an NBFC, what do you think that in the last, from your point of view, this income generating loans, because it was not defined earlier, and you see that in India, a lot of lending is happening on the business side, on the PSL side, in the villages, rural areas, and semi-rural areas by NBFCs, where they are lending on the informal income, the assessment of the informal income. Earlier, I think it was not clear that NBFCs can give the income generating loan to the borrower against gold actually. Now it is already there in the circular, and hopefully it will become a formal also. So what do you think this will help you to go to the bank and ask the PSL loan, these income generating loans, where they can be more comfortable. This gold is as a security also, and their hypothecation on the current assets instead of property. You can you may ask the borrower that you please place the gold with us, and the income also we will take your whatever the current assets are there, which is practically only hypothecation, but there is no use of it actually. So from practical point of view, what do you think? Will it help NBFC to get more and more funds from the banking system by way of the income generating loans, doing the income generating loans in the field? Yes, sir.
Yeah, yeah. See, NBFCs, gold loan NBFCs helping banks to book private sector loans. It has always been very contentious. Okay. In the past, Reserve Bank had almost said no, firm no, when it comes to agri loans. Okay. That being said, regarding other priority sector areas like SME, etc., I still believe there is scope because as per this circular, RBI is not saying that NBFCs cannot do income generating loans. The only thing is, LTV arbitrage, LTV advantage is not there. Okay. So there is some scope if you can document the end use, if you can do proper credit appraisal of the capacity to repay. But these activities are time consuming. I don't know how many NBFCs are equipped to do that kind of, how many gold loan NBFCs are equipped to do that kind of extensive checks, etc. Okay. But if you master that, definitely there is some scope. The private sector non-agree, because for agree, I don't know, even after this particular draft regulation, I still believe agree loans up to 2 lakhs or 3 lakhs cannot be done on gold security. There is some other circular. I'm not too sure whether that circular has been withdrawn or something like that has happened. Because recently, I think in 2024, Reserve Bank had come out with a direction to banks that agree loans up to 2 lakhs cannot be given on the basis of gold security, something like that. So I'm not too sure about that, whether this circular will change that scenario. On a plain reading, it does, but I'm not too sure about it. So to your question, yes, maybe some SME non-agri private sector, there is some possibility if we master the art, if we are patient enough. Yes.
Okay. Most of your borrowers in the rural areas, semi-rural, are into business actually. They are not salaried people actually.
Yeah,
So
that's my concern. That's my concern actually. See, imagine I book this loan as income generating, where the same customer goes to a bank. Bank says, I don't want any private sector advantage. I'm booking this is general purpose, income generating loan. But I'm not claiming any private sector. Imagine this scenario. That's where my concern is.
So I think Vinodji can give some highlight on that. One customer is going to the bank, non-income generating, and the NBFC income generating, the same customer.
To my mind, NBFC will have no motivation to classify the loan as income generating loan. For NBFCs, there is no distinction between a priority sector versus non-priority sector loan. And please also understand that when NBFC lends against gold and gives it the tag of a PSL loan, if that loan is sold to a bank will not get a PSL advantage. I mean, by way of a DA, direct assignment, if a gold loan backed PSL is sold to a bank, the bank wouldn't get the benefit of PSL. So NBFCs don't see any reason to classify the loan as an income generating loan. For the bank, the motivation is quite clear, particularly when the bank is wanting to give it the tag of an agricultural. Mostly, to my mind, a bank giving the classification of income generating loan would happen when the purpose is agriculture. Unni Krishnan sir might be, he's a practitioner, he would probably know the field reality, but to my mind, it's mostly when the purpose is agriculture.
Okay. So there is a provision, the onward lending to NBFC, that if they are lending to the ultimate borrower for the business purpose, for income generating purpose, and they are going to the bank for borrowing against their portfolio, that will be classified as MSME or PSL loan actually, and up to 20 lakh rupees per borrower, this can be, onward lending can be PSL loan. So I believe under that umbrella, because for MSME classification, the PSL classification, you need the mother certificate, because these now the mother certificate is very, very easily available even for individual actually. So like this is because we practice that area, so that's why we are trying to understand from all the experts that this might be possible, that many NBFCs which are into MSME lending, they might come into that area where they can say that gold can be as a collateral security, but they will take this instead of property, they will take gold, and the hypothecation of the current assets on the assessment basis actually. And this can go as a collateral, there's a PSL loan to the banks also. So this is this thing.
Kashiji, please also see the definition of gold lending, I think in para 5. For example, if we were to give it the classification of an MSME loan, SME loan, and we say that I have taken property as a primary security and gold as a collateral, or the, let's say, stock of the business as a primary security and the property as a collateral, gold also as a collateral. I think para 5 says that the scope of the guidelines itself is limited to only those cases where gold is the only collateral security. In addition to primary security, which is mostly the assets of the business to which I'm lending, if I have any other collateral security, for example, loan against property, then this direction will not be applicable at all. That would mean it will not be taken as a gold loan at all.
Okay.
Then it falls back under the LAP category itself. So if it was possible to give a LAP, well, people are anyway giving LAP. As you rightly mentioned, it's very easy to get MSME registration. And therefore, people are calling every loan against property is being tagged as a loan, as an SME loan. So both of that's something which I think even today is being done.
Okay. Right, sir. Thank you, sir. So I think we have already crossed our time limit. There are two questions which have come from the participants. So one question is a very important question, which is like how multiple interest rate in the scheme will be impacted, like 15% interest if they service within 3 months, or it will be 21% if how the 70-hour LTV is calculated. So suppose they are saying that there are two rate loans actually. So I think this practice is there already in NBFC space, where the rate of interest is low when you are paying early, and then rate of interest is high when you are paying late. So I think Unni Krishnan ji or Pooja ji may be the right person to give the answer of that.
Maybe I should answer that. It's
Yes,
very
sir.
simple. When there is a jumping interest rate over the loan period, okay, the highest rate should be applied for the purpose of LTV. Very simple. But it has been the practice because, you know, when we calculate the APR also, the average lending rate needs to be disclosed. No, we take the upper bracket, the highest bracket. So the 21 should be taken as the interest rate.
Yes, sir.
I
I think question
completely
is.
agree.
Yes,
To
sir.
add
Sorry.
to, sorry.
Yes, sir. Please.
To add to that, I mean, whenever any regulation comes, it's always good to be on the side of caution and lend on conservative rate, and hence obviously makes sense to, you know, look at the highest rate as your calculation purpose.
Exactly. Yeah.
Just to add that the so-called jumping interest rates, mostly the lowest interest rate would hardly be achievable.
Okay.
Because most lenders know that the borrower wouldn't be able to pay within 30 days. Therefore, he would lose the benefit of that lower rate. He'll actually end up paying 21 or 24. But therefore, the lower interest rate is seemingly an illusory rate. It's almost like a bait thrown to capture the borrower. But 12% देख के आ जाओ, उसके बाद तो तुमसे 24% ले लूंगा. So that is where I think there is a very important caution which the RBI is now put. And this is para 64 saying lenders shall refrain from issuance of misleading advertisements containing unrealistic claims. The claim to this low rate of interest is mostly unrealistic. Everyone knows the borrower would rarely be able to take advantage of the low rate.
So I think the question is related to LTV. So how the LTV will calculate? It will be on a 1 month period or a 12-month period actually?
I think Mr. Unikrishnan mentioned that because mostly it's a maturity repayable loan. I mean, the servicing of interest is done on a periodic basis, but the repayment of the loan is at the end only. Therefore, as Mr. Unikrishnan mentions, the LTV should be at the higher interest rate.
Okay, got it. So very clear now from that point of view. There is another question from Mr. Pradeep. I think, will these changes, specifically the guideline that LTV calculation should include the interest of the entire tenure, not promote the borrower to go back to the informal market? So he is having concern that the borrower will go to the informal market because they can get the better LTV on their loan actually. So any comment on that, sir? Anybody would like to say anything? It may happen, from my point of view, it may happen, but
You're right.
yeah.
That obviously seems to be an imminent risk right now. And like, you know, higher LTV, instant loans, all of those getting curbed will make the borrowers go back to their neighborhood, you know, pawn shop broker or the jeweler whom they always trusted. Even if, like, you know, Vinodji also said that it is always a last, option loan for consumers even still. While there are a lot of lenders who now move towards, consumption-based loans, but again, it's right that we do see that risk of customers going back to the unorganized sector a lot more.
Yeah, so physical presence and all these things might, but you see that there are risk also when you are going to a formal sector. You might not get your gold back also because there may be some challenges. So there are, I think, pros and cons both are there actually. There is one last question.
Actually,
Yes, sir. Sorry.
just to add on that, see, any regulation when it comes, it obviously may create slight disruption or slight pain for short term, but always the purpose is that it is for the overall benefit of the end customer, which regulator wants to protect. And there are a lot of things in this circular which are making the things very transparent and quite clear, and that is in the end for the end benefit of the customer. So obviously, there will be a benefit of associating with the regulated entity much more than before, than going to an unorganized money lender. There might be short term some pain in adjusting to the new norms, but I feel it's good for the sector as well as for the customers.
Right, sir. So the perspective, this is last question which I will take. So Brinderji has asked this question, and he the person who actually inspired me to do this program, actually this webinar actually, and he has one question: how hypothecation of gold receivable is different from pledge, and recourse is only gold jewelry? Will it not impact only small NBFC who are not rated and will not get hypothecation limits? And these regulations will make the NBFC out of business. So I think we have discussed and deliberated a lot on that. Really, maybe in short run it might impact, but long run it will be beneficial. So anybody would like to comment on that from the panel side?
When the borrower comes to the lender, he physically places the gold, which is called pledge. Pledge is possessory security. Hypothecation is non-possessory. The possession is not with the lender. Possession is still with the borrower. What we in legal parlance say, juridical possession goes to lender, but actual possession is still with the borrower. So from the borrower to the lender, it's a pledge. From the lender to his refinancing entity, for example, a bank, it would be a hypothecation. Hypothecation of the portfolio. Obviously, the lender cannot hypothecate the gold jewelry. That's just a pledge. Which means if at all the borrower comes and repays the gold loan, the gold jewelry has to be returned. The lender who refinanced the NBFC will have no claim on the gold at all.
Right. So there are two small questions I have just taken very fast. One is that is income assessment compulsory for non-income generating loans?
To my mind, I think every lending has to be based on the repayment ability of the borrower. So even though the gold is the collateral, for the sake of security, every lender looks at the gold as security, but eventually every lender has to look at the credit decision, which is based on the repayment ability. Therefore, income assessment, I would say, otherwise, how will the borrower repay the loan? A lender cannot look at the possibility of auctioning the gold to recover his loan. That's the last resort. That cannot be the way to do lending itself.
Unnikishan ji, aapka koi?
Yeah, maybe I'll throw some light on that. See, there are two aspects. One is credit appraisal capacity to repay, which is mandatory for everyone. Okay. But when it comes to end-use monitoring for consumption loans, this is applicable only beyond a threshold limit. If it is income generating loan, then it starts at 1 rupee. Even if the loan amount is 1 rupee, you need to do end-use monitoring. If it is income generating loan, if it is consumption loan, only if it is beyond a threshold limit as may be fixed by the board of the respective company. So maybe a company can fix it as 5 lakh, 2 lakh, 3 lakh, whatever amount, as per the board policy. But capacity to repay, credit appraisal, these things are mandatory for both the consumption loan and income generating loan.
Okay, very clear. So whether credit bureau report is also mandatory in gold loan? Is it written somewhere? Or?
Yeah, when we are doing credit appraisal, all these things come into play. You know the credit score, all these things.
Okay, this is part and parcel of underwriting. Yeah, please, Pooja ji.
So the draft regulation says that the mandatory credit appraisal policy has to be there, or a certain format has to be followed by every company. So in that, the credit bureau or other policy related guidelines everyone has to clearly articulate as a company.
Got it. So it is very clear now. Okay, great. Friends, I'm really thankful to all of you for participating in this discussion. I think this is a very, very interactive and important discussion on the RBI gold loan reset. And we got very, very good, I think, suggestions also, and the feedback also from the panel and the audience also, and Ani Kishanji and Parag ji, Pooja ji, and the Vinod ji. I think you have participated very well. I think you have spoken from your core of heart, actually. This is the beauty of this discussion, that everybody has participated and put their thought very frankly. And this is, I think, helpful to all of us, what the veterans are thinking and what the RBI is thinking, which is, I think, the 3-4 issues were there, which I think very, very relevant for the discussion. This repledging of gold, the LTV, and the income generating loans, and I think one more issue of the top up of the loans also, where we got the clarity on that. And the one more issue which is important for NBFC, the raising money for NBFC from banks and other large players, where the Parag ji has also contributed, and Pooja ji, which we have given that this fintech, how the fintech can change you themselves with that circular. I think you have to rethink and redesign your process and all everything. But we got many suggestions also, which are very, very positive. This gold coin, lending against the gold coin, and the other area is also this renewal of the loans without repayment of the loan. So these are I think some of the good things are there, which will definitely help. And initially it looks like that RBI little harsh, but overall RBI is thinking from the ecosystem point of view, which will help to banks and NBFCs to have the better recovery, better collection on the portfolio which they are lending. So I would like to thank you to all the panel speakers for joining with us, giving their time to us for this kind of discussion. And we will submit the recommendation or the suggestions to the government and RBI, and let's see how much they will consider, and will they include in their final verdict also, final circular also. But at AFAI, we have tried a small initiative. I think it will help the entire ecosystem. Our objective is that the industry should get the advantage of it. So I would like to thank you to all the panel speakers for joining with us, and all the participants who have joined from the various places and from various segments also in this program. And I would like to thank you once again to all of you. And I would like to thank you to Resurgent India or the AFAI team for organizing this program and on this important topic, and putting your hard efforts also. I'd like to once again thank you to all. And I would like to wind up this session here. Thank you so much. Thank you all. Thank you for your contribution.
Thank you.
Thank you, sir. Thank you, everybody.